Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host Nathan Birch, and it's the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Reality it is. 2026, I'm very excited by. I've had the thought of doing a podcast for the last 6 weeks, 8 weeks. I've had an idea on it. And I thought, how could I make this podcast? How could I make it to bite-sized pieces, share everything that's happening in the world? I think, okay, the podcast that I need to do, I might split it into two. I'll make 2 podcasts. And then we see the interest rates rise as of yesterday. And I thought, well, hang on a second, I need to do a 3rd podcast. So I'm going to introduce you to a 3-part series of a podcast. I'm breaking down some very detailed data and information out there, which will shock a lot of people and hopefully highlight to you where we are, what you should be thinking, how you should be preparing, and what we could expect to see in the future. So today I'm going to discuss the interest rates. A lot of people ask me, Birchy, why didn't you hop online to do the Facebook Live? You always do Facebook Live's interest rates. I've been so busy. I've never been busier in my life. We've got so much happening. Really exciting time to be alive. So I'm going to cover that in a podcast. So first week, we're going to talk about interest rates, what I'm seeing, where they're going, what we can expect. Next week, I'm going to be talking in the podcast about inflation, hyperinflation, collapse of governments, what we're seeing around the world, what we could expect in the world. And on the final week is going to be a very exciting and very important thing. I'm going to explain to you how you can still buy a house in Sydney in 2026 for $10,000. Like, I mean the whole purchase price of $10,000. You can't go and physically do it, but I'm going to show you how you were robbed for the last 60 years. And literally $10,000 will buy you a house. So if you want to go buy a $1.5, $2 million property for $10,000 today, that's all it would cost you. But there is a catch to it. It's a 60-year scam. And it all started on the 14th of February, 1966. So it's in the scam occurred then, and it's a 60-year anniversary as of Valentine's Day this year. So keep an eye out for the rest of the series. Today, I'm going to hop into the interest rates, what is happening out there. So this is actually take 2 of this podcast, because I've pulled out this rate tracker chart, which is a chart for those of you that are watching it on a video. You can see it on the screen. It's a chart that I've been sharing with everyone for I don't know, a decade now, talking about where I expect rates to go to, trend lines and all that. And I started filming this and I was like, hang on a second, someone's got me the wrong chart. And some of the video, I've really got some people in this room as I'm filming. I was like, where's my chart? Where is it, right? And I realized that the RBA has cut and edited the data that they're putting out, because this chart used to go a lot higher. It doesn't have in there 1992 anymore. It's only showing you about 21, 22 years in this chart. It's not showing you the what happened beforehand. I wanted to share with you like 50 years of rates. So I was able to get this one, which doesn't show as much. It just takes us back to 1990. And if you look at a chart now, it just shows that we've got an interest rate that bumps around that 4%, 5%, and it's sort of flatlined, right? And for those of you that have been following me for a very long time now, you'll see that these things were on a steep decline, and this is not how the chart used to look. So I'm a little bit, I find it a bit interesting that they're playing around with their numbers. That's something that I can perfectly share with you, what was happening. But I'm going to read an article here. It's the only article I've read from the news about this. It was just funny. The article says, from news.com, it says, Reserve Bank's failed experiment haunts Australia as interest rates rise again. A bleak map shows how Australia now stands alone among the world's major economies. Expert warned us that this was coming. A failed experiment from Australia's central bank came back to haunt the nation. A leading economist has said, putting the economy out of step with global counterparts. The Reserve Bank of Australia on Tuesday raised its cash rate by 0.25% or 25 basis points, bringing it to 3.85%, a move set to hit Aussie mortgages and spendings. It means Australia's become outlier among its peers, revising downward cycle of interest rates with inflation rate of 3.8%, sitting at higher than other major economies. Goes on to read. Anyway, the heading is all that I really wanted to share with you guys. And the heading was about, just showing you that we are the only country that is in this position at the moment, putting our interest rates up. So if we go around the world, I'm going to pull out this chart now. So I've got two charts here. This is from the US. This is a chart, actually, this is a chart from Australia, sorry. No, this is a chart from the US, just outlining where the rates have been, but this is zooming in for the last 10 years so we can see it. And the reason why I'm deceived with this is it does look very similar to ours. It went up, down, collapsed in Corona, and then took off in the last couple of years and started coming down. But the difference is as of December, so we're here in January in Australia, or February, first couple of days of February, we're seeing the rates rise, but yet in the US, they're in the process of reducing their interest rates. And why are they reducing their interest rates? Well, it just shows their economy is not that good, and they're in that policy of downward trend. And if we look at all the data and overlay, cash rates of many years, like here's just the two that I had up, we can see it peaked out in the US at about a 4.75% interest rate in 2023 going into 2024, and then started reducing in 2025. It went out for about a 12-month period. And here in Australia's chart, we capped out in that same period, but we went to about 4.25%. So it's kind of odd, but now we're seeing the rate decouple with all of the other currencies around the world. And I take note on that because what is happening different here in Australia to other countries, and not much is happening different here. There's a few little things that are. We're a very resource-rich nation, so we've got lots of commodities that are in the ground that we can export. And if we're going to look at commodities, which we'll be talking about shortly, yes, my microphone is being held up by a silver bar. We'll be talking about that in one of the episodes as well, just of commodities and what is happening. So we've got a country which is rising, everything's getting inflated away here. We're one of the only countries which has pushed our migrant policy to this extreme. And if we look at other nations around, I don't have the stats for it here, but basically the countries that have brought in mass migration over the last few years and have slowed that down, they've considerably fallen off into recession. So I guess we're lucky here by the fact that we keep bringing new Australians in, and what that's doing is putting a lot of pressure on our current infrastructure, whether it's demand for rentals, whether it's demand for property prices. You need to really ask yourself, where do we see this going into the future? Are we going to keep seeing people coming to the country, or are we going to see them turn that around? And I don't see anything changing at the time being, and I don't see the books are looking very, very pretty from a government perspective to try and manage that debt that we've taken on. Countries in $1 trillion worth of debt. Every time that interest rates go up, the cost of that debt that the country holds goes up as well as those bonds mature and need to be rolled over. And that debt becomes a lot more expensive for the Australian government to support. So they need to find new ways to bring revenue in. So the more people that they can tax, the more revenue that'll be coming to the country. But based on that, we see a lot of infrastructure pressure on the current infrastructure, what we've got, and that's fantastic. So, I guess in short, how far can these interest rates go? Where will it go to? What does 2026 look like? A lot of people are concerned about rates going all the way up. They could keep bringing them up. But the one thing I'm seeing is that the rates here in Australia have decoupled from the rest of the world. Are we going to lead the world with a higher interest rate? I don't believe so. I actually feel there's a lot of stress fractures out there in different parts of the economy, and we'll cover that on other episodes of this 3-part series. So I feel like when we look at the charts, every time that we've seen one of these interest rate increasing cycles, I'm just pulling out that chart I had to work with. So if we're looking here at, say, 1992, it went all the way up. Then it started coming back down. The rates tumbled, right? They went up all the way to 18% or 17.5% in 1992. came all the way back down. By 1994, they were back down to 4%. Then they went up by 2% and then back down by 2% pretty quickly. And it's like there's like little dips. I remember back, here we go. If we look at the chart from the GFC, right? So we had from 2003, interest rates went all the way up to 2008. That was a good 5 years of rate rises without any retrieval. GFC hit, fantastic, crash, bang. That dropped cash rate all the way down and went down to 325 basis points. Soon after that, in 2009, there was a bit of activity happening. They tried to stop that. And you can see this on the charts, right? So there's what I'm talking about here. And maybe the editor will throw this on the screen so we can see it wherever we can put on the screen. But we can see in 2009, rates fell sharply. And then as of 2010, just before the start of 2010, they started raising rates. And rates went from 3% to 4.75%, thereabouts. They sat there for 12 months, so they went up about 1%. And they came all the way down the next decade, literally from 2010 all the way to 2020. They went down to zero. And that wasn't just some, exciting thing that happened. It was, pretty consistent all the way down. So, is this just a last, the higher the rates are, the more they can pull it down. It's the more tools in the toolkit for what's to come. But either way, it means a couple of things, right? The last time we saw interest rates rise, which was back in 2022, 2023, we saw rates rise. Everyone was fearful of the fact interest rates were rising. But what happened is inflation gobbled up, right, and came to the table, and house prices doubled, tripled, quadrupled. What happened to property prices in your neighbourhood since 2022? Then we saw rents rise every time. I loved every time. Someone commented on an article online the other day and said, this poor bastard, because I said there was an article out about me having some properties that I bought and stuff. And on that article, someone made a smart-ass comment going, wait till interest rate rises, you'll go broke. And I was like, yeah, it's kind of funny to say funny things sometimes. And I laughed and I said, it's good when interest rates come, the rents go to rise as well. So it's, is that what's going to happen? I don't know, right? All I can know and all I can look at is the data that's out there, the macroeconomics, which I'm going to be covering off a lot more in this series. The next 2 podcasts are going to be very, very long and in detail, explaining what I'm seeing and where I see the future going in the bigger picture. But the data is there, it's written in stone. Every time they increase the rates, the government is spending a lot more money. They've got $1 trillion of debt. 1% interest, 10 basis points is $1 billion. So just with the act, if you had $1 trillion worth of loan, grab your calculator out, strap yourself in and do a calculation, right? If you had $1 trillion times it by 25 basis points, so 0.25%, that'd mean an extra $2.5 billion per year. So just with that one action happening yesterday with the Australian cash rate, that means the government debt is now going up by $2.5 billion per year just in interest to service that. If it goes up another 5 times, there'll be 1.5%, that'll be $15 billion a year extra interest that they've got to find to cover. They get nothing for it. That's a big amount of money. It might sound small when we're talking about government, but considering the debt that was here a decade ago, there was no debt. There was $20 billion worth of debt. Now we're paying that just from an interest rate rise as a nation. They've got to find ways to print their way out of this. They'll try and pax you. They'll try and stretch things out so far. I was having this thought the other day, and I was talking to a client for the first time actually, and we're talking about migration and the demand that's putting on our infrastructure today. And just think about it, right? Like 600,000 people came to this country last year. Out of that, they all need a house. They need a roof over their head, right? Whether they're buying, whether they're renting, whatever they're doing. Let's say that 3 people go per house, right? That's 200,000 properties. That's the size of Townsville. That's the size of Darwin and Tasmania put together, or Hobart. That's the size of Canberra thrown in the mix. That's a big amount of accommodation that we need to provide for people to be here. Every time a property, let's say that the property market, I don't know, 50 grand's nothing out there, right? Like the property goes up by 50 grand, poof, you don't even notice it. It's gone from 1.15 million to 1.2 million. You got to think, how many dwellings are there in this country? We've got 10 million dwellings in the country, whatever it is. If they've all gone up 10 million, times it by 50,000, right? That's a lot of equity. Everyone's becoming richer that own the assets. The inflation's doing its thing. However, the inflation's getting to that point where I said back in 2020, we would enter into a hyperinflation territory. It wouldn't start before 3 years, which would have meant 2023, which obviously we have not seen a hyperinflation, but it is when we started seeing our inflation that happened. However, things are ramping up, and I'm seeing a lot of hockey stick charts out there. When I mean hockey stick charts, I don't have one here now, but I'll be showing you on the next podcast what a hockey stick chart looks like and what to expect and what happens to our currency after we inflate it away. So am I concerned by interest rates going up by 20 basis points? Not at all, right? I was talking to someone at lunch just before I filmed this video, and they asked me, what do you think of interest rates? And I said, give me a calculator. And I just randomly typed in a figure. I said, $250,000 for a property. That's the average property price that you're buying. And times it by 0.025%. And it came up at, I think it was $625 or $675. I think it was $625. And I laughed. And I said, divide it by 52. And he goes, wow, that's per year. And I was like, yeah. And it worked out to be $12 per week. So on a property that I myself, or you guys that are my investors, we're buying properties at 200, 300, 350K. A 25 basis point increase is $12 a week on a $250,000 loan amount, right? If you're buying it for 250, that's 100% mortgage, right? Yeah, it sucks. $12 better in your pocket. But what will happen to rents now, right? People might be not able to service. It might be pushing them over the edge. Whatever the case may be, it's going to add to more inflation. Just as the government debt has gone up, the bill for their $1 trillion worth of debt at $2.5 billion per year, that gets passed on. That's going to create more inflation. They can't control inflation with interest rates. They've shown it's broken. That's why they started dropping interest rates already. They're pushing them up. I believe it's silly. I'm excited to see what comes for this. And I'm not concerned in the slightest cooey part at all. I'm excited for this. Push the rates up more, right? Because what comes after this could be one of the scariest, and it probably will be for 99% of people, or it could be the most exciting thing that comes to all our lives, which we haven't seen. I haven't seen a hyperinflation. I haven't seen a currency debasement. But the scary part that comes from that, even if you're wealthy, you make billions and trillions and quadrillions of dollars out of thin air for doing nothing, it's a collapse of the society that's around you. And it's happening around there. The quality of life of people globally in the last decade has gotten worse and worse, right? Yeah, sure, you might have a Tesla that drives for you, or a bit of sat-nav where the navigation system's better in your car. But the quality, you used to own your car. You didn't have to be on a mortgage for your car. You were less enslaved. Quality of life is getting worse because people are getting chokehold, and once it pops, it creates chaos out there. But I'll get onto that into my next videos, and I'm not trying to sound depressing because I'm actually very excited by what I'm seeing. And the interest rate rises, whether they go up one more time, two more times, three more times. Do I think we'll see any more? I'm actually surprised that there's Michelle Bullock, person, Bruce Jenner looking thing, has actually been able to put the rates up like this. So let's see what happens. What do you think is going to happen with the interest rates? Are you excited? Does it make any big difference in your life? For me, I've got tens of millions of dollars worth of debt. Before anyone comes and goes, good for you, Birchy, or whatever, just take a moment to pause. I've seen cycles like this. You've seen cycles like this. Your parents have seen cycles like this. Your grandparents have seen cycles like this. You think you're going to buy a property and hold it for 30 years and the interest rate's just going to stay the same for that whole period of time? We need to zoom out. Look at the charts. Look at what's happening. Look at the trend lines that are occurring from all the data out there. Where is the cash rate going in the longer picture? And where will it be in 12 months' time, 24 months' time? And that's the exciting time to when you realize how that works. So, if an interest rate goes up on $10 million, I don't know, maybe it's $200 a week, $2,000 a week. I haven't even calculated it, right? Yeah, there'll be some pain out there for myself, for other people. But, next time I'll put my rents up, which I just did. One of the last podcasts I did of 2025, I was saying I'll push my rents up by 200 grand. Just pushed a few emails. This one up here, $20. That one up there, $30. Nothing crazy. Nothing's going to hurt everyone. But it's just those slight movements. This is helping you push your rents up. That's my thoughts. What's going to happen with inflation? The scarier part of all this, which I'll talk about when I get into Weimar, Germany in my next podcast, will be about not this cycle, maybe 5 years' time. Once we see the hyperinflation really ramp up, where could interest rates go then? We'll be laughing, going, oh, everyone was scared about them at 10% or 15%. Interest rates could go all the way up to 80%, 70%. Go look at Turkey, go look at Venezuela, go look at Zimbabwe. It's happened before, it'll happen again. And we shouldn't think ourselves immune because we're some country that's never seen it. It's probably the scarier time of our currency collapsing. So on that note, folks, don't be alarmed, don't be scared. If you've got a 250 grand mortgage, it's about $12 a week from one interest rate rise. Your rent's going to cover it. It goes up 4 times this year. It's $50 a week. Yeah, it's painful. You lost $50. Is it going to be the end of the world? It's $2.5 grand a year. It might be up for this year, and then it comes back down. But what's going to happen with those rates going up? Rents rising, certain things happening out there. I think it's when you look back, people were scared 5 years ago or 3 years ago when rates started going up. I don't believe, if they push the rates up, much higher, we'll see pop. We'll see a lot more stimulus needed for this market. We see stimulus, we'll see more inflation. On that note, guys, I'm going to wrap up this video. I look forward to seeing you next week where I talk about the collapse of countries out there. Bye for now. Make sure to subscribe. Google Play, Apple Play, Spotify, and YouTube. If you have any questions, you can always reach out to us, 1300 367 925, admin@B.Invested.com.au. Thanks for watching.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.